The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN, your number one source for technical analysis for trading and investing. Welcome to the April 22nd, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, a daily investment newsletter that is the intelligence for creating your financial freedom. Hope everybody out there had a great day yesterday. I know I did, and it's great to be back with you. My outcome, as always, is to help you to become a better money master and to provide you with the tools that help to lead an inspired life. That's what I normally do. I got off track here. Well, maybe I should do that anyways. Let's take a look at one of our tools here that do help you to lead an inspired life out there. And that's called the law of giving and receiving. You see, law of giving and receiving is basic to the life of success. The law of giving and receiving boils down to the following 9 guidelines. Guideline number 1, to bring blessings upon yourself, bless your neighbor. Guideline number 2, to enrich yourself, enrich your neighbor. Guideline number 3, honor your neighbor, and the world will honor you. Number 4, love is found by giving love. Number 5, the measure of a person's wealth is the measure of the wealth they have given. Number 6, that which you take away from anyone, the world will take from you. Number 7, when you take the first step toward that which you want, the universe will take its first step to give itself to you. Number 7, the universe is a mirror which reflects back to us that which we reflect into it. And rule number 9, love is like the ascent of a mountain. It comes nearer to you as you go nearer to it. Folks, if you're not giving, then you're not living. And the law of giving and receiving, well, it's basic to a life of success. Let's go check out the market. Let's go see what it's giving us today here right now. We've got Dow futures up 11 points. They're trading out at 16,382. S&P mini, it's up 2 points, trading at 1866. NASDAQ futures up 9 points, trading out at 3650. Russell 2000 up a point and a half or so, trading at 1139. King dollar back 13 cents, trading out at 79.89. Goldilocks back 80 cents, trading at 12.87. Silver up 4 pennies at 19.40. Light sweet crude back a buck right now. It's trading out at 103.31. Our call number is 877-927-6648. Let's take a quick peek across the globe out here before we check out our markets. Over in Germany, the DAX up 151 points, playing a little catch-up here. It was closed yesterday. Of course, it's more than a little catch-up. It is up 1 6/10%. The FTSE up 73 bucks. That's up a little over 1% here this morning. In Asia last night, the Nikkei down 123, down 0.8%. Hang Seng off 0.1%. That was a close down 29 points. It closed at 22,730. And the Shanghai up 7 points. That was about 0.3%. It closed at 2170. So where do we begin our day out here? Let's begin our day. Let's take a look at the weak link in the market. What did the weak link in the market here do yesterday? And the weak link I'm looking at here, I've got the daily chart for the NASDAQ futures. We're looking at the June contract. That's what we're looking at on our chart out here. What do we know about the NASDAQ futures? Well, number 1, what we know is they came back. They tested the swing point from February 5th, couldn't bust it down. Now what it's going to try, and it got back into, what we'll call the descending price channel. What we're really focused on is really 2 different things out here. Number 1, if we take a look at a really quick trend time period, that trend time period out here, you try saying trend time period 3 times in a row. That trend time period out here, April 3rd's high at 36.69. Again, from a trend standpoint, we'll use that as the high. We'll also use as the high the downdraft session from April 10th. That level out at 35.99. What the NASDAQ did yesterday was it broke through that trend. Conviction-wise, it broke it it broke it nonetheless. So that's the first level. That's the first beginning of a trend that was broken out here. What it needs to do, what's likely going to do here, number 1 is test the highs from April 10th. 35.99.50. You're trading at 35.61 Doesn't mean it's going to do it today necessarily. We have had 2, 4. This could be the 6th up day in a row out here, and that's a possibility. But at some point in time, I suspect that that's where we will see a test. Now, a close above 35 $99.50 sends price right into what? Into the top of the descending price channel. That's going to be really the super test that is out here. I'm not so worried about whether it can or can't get above. It can absolutely get above the April 10th high out there. So let's not necessarily make that the benchmark. That creates a 100% move of a move. It would be logical, quite frankly, for price to test that area and then begin a pullback out here. But that could, quite frankly, be setting up nothing more than the B to a C and A to B equals CD to the upside out here. That I don't know. What I do know is the key level for us to be watching is, in fact, the top of that descending price channel. And the price level, it's really hard to gauge until we actually get up there. But could be in the 3,600 area easily. If we just take a look at normal retracements out here, the retracement off of the last time price was at the top of that trend line. That was April 3rd, or that channel line, I should say, down to the lows here on April 15th. You'll see that the 0.786 retracement level is 36.12. 35.68, that happens to be your 0.618 retracement area, so it would be logical for price to get up there. That's just a bit higher, 35.68. We're at 35 in essence 62. So don't be surprised to see the market open up, get up into that level, and then begin to sell off a bit. Why? Because it's an elevator. Because it's an elevator, and there may be folks like myself who went ahead and bought this market at the lows, have been riding the elevator up. That's where I would expect to see some potential profit taking take place. It's just normal. The question is going to be how many folks are going to get off that elevator out there, and where would price pull back to if in fact it does. Does that mean that it has to? No. It can move all the way, can shoot all the way up into the top of that price channel. And, of course, why do we want to watch that price channel? Because the NASDAQ has been the weak link out there. And if, in fact, it can bust through that, what it will be doing is just really confirming what the S&P and the Dow are saying. And the Dow and the S&P are saying, hey, you couldn't do any damage to me on the way down. I'm going to go see what kind of damage I can do on the way up. And if, in fact, it's the NASDAQ and the Russell 2000 that begin to start to turn, if they can break this descending price channel, guess what? We're going to see higher prices in the market. We'll see the S&P and the Dow actually take out their most recent highs out there. But we'll take this one step at a time. That's all that we can do. My outcome is to be able to read the message of the markets and give that to you. Remember, this is nothing more than a book. And we're going to turn each page one tick at a time, one day at a time. And, of course, what we're going to do is we're going to stay inside our trading time frames. You know, this is a daily chart that we're looking at. Many of you out there, you're just simply managing your longer-term assets. You're managing your 401k accounts out there, and therefore the daily charts are, quite frankly, nothing more than just some noise out there. In fact, when I switch over to those intraday charts, really the benefit for you is just simply take a look at patterns to understand how those patterns play out so that you can make decisions with regard to your long-term trading accounts. Let's go take a look at the other index futures accounts out here. Let's go take a look at the S&P 500. Let's see what it's doing. Really just up 1.25 right now. Trading out at 1865. Nonetheless, what did it do? Well, what it did do yesterday was it got above the 0.618 retracement level. That was at 1858. There weren't a whole lot of folks that came off of the elevator yesterday inside the S&P 500, and for good reason, because everybody would know that prices traveled inside the April 4th swing point out there. We know that the S&P formed a Gartley buy pattern. As you know, there are 5 outcomes of every Gartley buy pattern. And the way that price is setting up here, not volume, but the way that price is setting up here, the way the candle structure is setting up, is it wants to not just visit the top, not just visit the high of 1892.50. It actually wants to take it out. It wants to take it out, and it wants to move up to a price level of about 1963. Now, 1957 to 1963, we've identified 2 patterns that would suggest that that would be the outcome. That's if, in fact, it can get above 1892.50. Next stop on the ES Mini, doesn't necessarily have to be today, but the next stop is 1873.50. I would suspect we would see price get up to that level as the NQ is getting up to its 0.618 retracement. There, we might begin to see some profit taken, but boy, if we don't, tells you there's some real underlying strength inside the market. So we've got at least 1874 to 1892, and if the ES Mini can get above that, that's going to set up a move, because we've got the consolidation breakout here. Prices came back into consolidation pattern, and it created a Gartley buy. And that's a beautiful thing. If you take a look at that Gartley buy, I mean, if you were to go read H.M. Gartley's book, And take a look at page 222. He doesn't talk about Fibonacci numbers out there. He's just taking a look at the A to B equals CD on a move that might have been missed out on. And if you take a look at that move out here from the lows here, from the consolidation back in February to the move higher all the way back into April, one could say, hey, that's a powerful trending move out there, and I want to be able to find the first buy point of the move down. Well, that would have been your A to B equals CD. You got the confirmations of that. Of course, I'd have to really, I can't really color it in here. I don't want to get rid of my consolidation pattern, but you'll just have to, well, if you're watching this on TigerTV, you can see that move in the marketplace out there. But that's exactly what has transpired, and we've seen a nice, powerful move here, candle-wise, off of that C point. If we take so that's what's going on inside of the ES Mini. If we take a look at the Dow futures out here, Dow futures, where are they? Where are they? There we go, Dow futures are in my lower left. You'd think I could see something. Now, Dow futures have been a little bit weak out here, but hey, they're in between. They're on the elevator on its way to the 16,426 mark. That's a 0.786 level. But you know, the Dow, it too, it's trading inside that swing point high. It wants to get up to 16,574. Dow futures up 12, S&P up 1.5. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is always better when we're together, folks. Thanks so much for joining us. Now, if you're watching us on Tiger TV, I told subscribers this morning, clients this morning, that I would share with you really the only significant caution sign that is in the market right now. And it's just a caution sign. The month does not close until next Wednesday, I believe, is the end of the month, is April 30th out there. So we've got, 7 trading sessions left. That's including today left in the month. So we got a lot of time out here, but there's a unique feature. If you watch this, if you're listening on your radio, your mobile device at TFNN.mobi, thanks so much for doing that. I'll describe to you what we're looking at. Remember, you can catch the archive of this show. It's on Channel 9, and if you'd like to see the live stream of this, if you'd like to see this chart streaming live to your your smartphone device out there, just go to the homepage at TFNN.com. Over on the right-hand side, you'll see a little button there with 3 little smartphones. Click on that. The show will stream live. And, of course, after I show you this chart, then go over to the homepage at TFNN.com and make sure you buy your Tiger Dollars out there. You certainly want to take advantage of that. Now, what is it that we have forming in both in the 2 strongest indexes as we speak right now? The 2 strongest indexes being the S&P 500 and the Dow. Now, what we have in the case of both of them are potential, I do say potential, key reversal sessions. What's a key reversal session? Very simply, we've got 3 requirements. First requirement is that the previous high and low needs to be exceeded by the current high and low. And that's what we've seen here during the month. If you take a look on the Dow, if we take a look at the month of, we're in the month of March, the high was 16,505.70. The low was 16,046. During this month here, we've already seen a higher high, 16,631. We've already seen a lower low, 16,015. So requirement number 1 is already in place. Number 2, it must take place at an extended condition. Number of different ways to take a look at an extended condition. Number 1, you can look at the relative strength indicator, see if at or near this level it's been above the 70-ish area. If it has, well, that's where you start to get into either overbought below 30, would be oversold out there, so that would qualify. And A to B equals CD to the upside or downside, that would most certainly qualify. Hey, we've got the whole kit and caboodle when it comes being to the upside here inside of the Dow. Same thing inside the S&P 500. So we've got requirement number 2. Requirement number 3, and this is what we won't know until the close of next Wednesday, it just needs to be 1 tick lower than where the actual open for the month was. Well, inside the Dow, the open was at 16,458.05. 16,458.04, even though it would be a doji, it'd be a small little doji out there, a little doji in the window, it would still be 1 tick lower. Now, would there be conviction behind it? No, but let me tell you something, folks. I've gone back since 1928. Well, 1928. That's where my data goes back to inside of the Dow on a monthly basis. And I can tell you, creating true key reversal sessions on a monthly chart is really hard to do. Breaking up is hard to do, right? Well, in the case here of the Dow, it's hard to do. How many times? And I may do I'll do a special report if it looks like, in fact, that is what is going to take place. If it's not going to take place, providing a special report to y'all, no reason for me to take up your time with that. I just simply want to do reports when it all of a sudden really makes sense out there. Here's what I can tell you. And I won't tell you the conclusion here. I'll tell you that it's occurred 23 times in the past. Now, what I do have on my chart here is I have 4 of those times where it has occurred as well. So in this case here, We've seen before. What we've seen here, the month of January, we saw a nice big bearish engulfing candle. Of course, that was completely reversed the following month. That's why it's always good to be able to get a second opinion out there. Does that mean that price will move lower even if we do get that? No, because you wait for that second follow through. You wait for that confirmation. In this case here, it's a monthly chart we're looking at. It means you got to wait to the end of the month out there. That would be one of the things that you would be waiting for. When was the last time we saw a key reversal session inside of the Dow? Well, happens to take you back to June of 2007, and that level here, which happened to also be a shooting star, that level as resistance. Yeah, inter-month there was a higher high, but folks, as you know the story, back in October 2007, prices just seem to move lower out there. If we take a look at the last key reversal at the bottom, well, that came back in March of 2003. Yeah, was the relative strength indicator all the way down at the bottom? No, that had taken place prior to that. That took place back in September of 2002. Prices really traveled sideways. That was your key reversal. That was your low, in essence, in March of 2003. And, of course, price moved all the way up to the key reversal session here in July of 2007. So are these important to be paying attention to? Hey, if they weren't important to be paying attention to, I wouldn't be sharing that with you. I wouldn't be wasting your time. I'm not about wasting time out there. So this is something we want to be paying attention to. It's the same inside the S&P 500. 877-927-6648. Dow futures up 25. We'll be right back, folks.
It's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done in this whole uptrend, folks, it's just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 22 points. Trade out at 16,471. The S&P is up 2, trade out at 1874. Oh, I don't like this here. My system is freezing up. That is never a good sign. The composite up 17 points. It's trading out at 41.38 or so it looks to be. Lead the charge. The upside, we've got Netflix. Netflix up $25, trading at $3.74. Allergan, AGN, ticker symbol. That's up $21 this morning. Perrigo, PRGO, up $7.75. Jazz Pharmaceuticals, man, that's up $4.82. I was looking at a potential buy on that last night. That is up $6.67. GW Pharmaceuticals, GWPH, up $6. Reverence Therapeutics, up $5.73. Shire PLC, up $5.80. Valent Pharmaceuticals, up $5. Hog, Harley Davidson, that's up 8% this morning, up $5.61. Looks like net income came out $265 million versus $224. So they beat the bottom line out there. Their Q1 consolidated revenues $1.7 billion versus $1.5. So beating top line and beating the bottom line out there. Amazon up $4 and change. To the downside, Metadata Solutions, down 20% out here. They also came out with numbers, net loss of $1.8 million versus a profit of $5.7 million out there. How they do on their top line numbers? $76 million. Wow. So they beat their top line compared to the first quarter of last year by quite a bit. They did $76 million versus $63, and they turned a profit into a loss out there. Trading down $10. We'll take a look and see what kind of volume is behind the move. We got Lexmark. That's trading off about 8% here this morning, down about $3 and change. Trading out at, looks like about 43.05. Pentair down about 4%, off $3. Apple off $2.60. PHG is the ticker symbol out here. Looks like, man, I don't even know what that is. It's not ConocoPhillips, but it is. That's a weird first name on my chart. That's interesting. FireEye, FEYE is the ticker symbol. They're also trading down this morning to about 2.5% off $1.20. Zions Bancorp, ZION, off $1.20. Rambus, boy, it's a long time since I've looked at a Rambus stock chart. RMBS is a ticker symbol. They're trading down $1. If we take a look at gold, let's go take a look at the commodities. Right now, we've got gold trading out at about $12.88 out here. Still has not broken the B point of an A to B equals CD to the downside. That is the April 1st level. That is $12.7740 that we want to watch like a hawk out there. So it's trading into that swing point, has not broken it, whereas silver, on the other hand, has broken its swing point. Let's go take a look at silver. Silver right now trading out at about 1941. Its swing point, its B point being that March 27th level, that low there, 1957. It says at a minimum that silver ought to move down and at least test the bottom of the consolidation range that it had broken out of, broke back inside. More likely a spike down and a test of the December 31st level, $18.72. We're not seeing any kind of reversal signal or anything like that inside of Goldilocks or silver. for. Of course, inside gold yesterday, we took a look at platinum. Let's pull that chart back on the screen out here. Platinum may be setting up a nice little Gartley. Come on, where's that window? Towel vertical. There we go. That may be setting up a nice little buy for us. There's a nice Gartley, potential Gartley, 0.618 Gartley buy at about the 1373 range. So ahead of time, we're watching that area. What you'd like to see, you'd like beautiful Fibonacci numbers at that 1373 mark. If in fact platinum can get down there, ideally blow through the March 27 swing point. Do that on lighter volume, meaning less than 20,000 contracts. Get down to 1373. Give you a reversal signal. That might set up a nice buy inside of platinum or one of the index ETFs for platinum out there at this stage. We're watching it deal with the March 27th low out there of 1394.30. Let's take a look at light sweet crude. That was trading trading down here this morning. Now, what we know about light sweet crude is it's trading off quite a bit out here. So it made that 100% move look like it was going to go ahead and make a move to complete its butterfly pattern, the 106.51. But the sellers have gotten in the way here. It's trading at session lows at 102.79. Most certainly something for us to want to pay attention to, and the reason is when it comes to light sweet crude, I can tell you that the large commercial operators are at their largest net short position like ever. Hey, the CFTC data did come out on Friday. I did not get a chance to update it, but I can tell you as of last week, and I doubt that anything has changed out here. The big money is looking for crude oil prices to fall substantially, and we may have just seen the signal here. Yesterday was not a signal, but today most certainly is as we speak here right now. 102.82 is where it is priced at. If we take a look at the 30-year Treasury out here, and I got to apologize. Looks like the data flowing through my system is bogged down a bit out here. We're still live, so that is good, but may be some slight delays. But if we take a look at bonds made a move up into that old resistance level. Gave you a nice big old bearish engulfing candle. Boy, big old bearish engulfing candle on the 17th out there. You saw some follow through yesterday to the downside. We ought to see bonds here at least move down and test the trend line. That trend line that I'm looking at is coming off of that's a continuous contract that I'm looking at on my screen here. That's coming off of the low from December 31st. I'm using that as a touch point. I'm using the touch point of March the 7th. That also happens to coincide with the touch point of April 2nd out there, and that says that we ought to see the 30-year Treasury move all the way down into that area. If it breaks that trend line, something to think about. We'll take things one step at a time out here. Let's go check out some of these stocks that are moving and grooving. Let's go take a look at some things that are moving to the upside. I want to go take a look at Jazz Pharmaceuticals because the jazzy one out there, that was something that I was looking at last night as a potential buy, and I did not do that. And maybe for good reason. So in any event, let's take a look at Jazz, see where it is trading at. I've got to update this chart here. Boy, I've got some bad delayed data out here. There we go. Here's Jazz Pharmaceuticals. So Jazz Pharmaceuticals here today taking on a swing point from April 1st, April Fool's Day, 945,000 shares. It's done 185,000 already in the first 11 minutes of trading out here inside the Jazzy one. Why was I looking at it? Well, I was looking at it from this standpoint. You know, these stacks have gotten whacked, and Jazz is a nice-looking stock chart. I'll show you exactly what it was I was looking at, and that is here. This had a nice sign of strength. Let's put the volume across the bottom of the chart as well. So as we take a look at it, the sign of strength, its most recent sign of strength where prices pulled back into is the December 20th level, 2.2 million shares down there. Now, when it pulled back here, it made the low, its most recent low. This was on April 7th, did it with 1.8 million shares. So the day before was coming down with about similar volume to the breakout. Volume dried off. That was on April 7th. And then what did we get here? We got a nice bullish engulfing candle on April 8th. That's what Stevie likes to see inside of a marketplace. Likes to see a bullish reversal. You got follow through on that next session. Price came back here on April 15th, 1.1 million shares. So the 1.1 going against 1.8, going against the going against 2.2 million shares, and that was the reason why I was taking a look at the jazzy one out there. And we may have to consider this one as well. I'd like to see what kind of volume we get inside the move. One of the things that had to be cautious here was yesterday's up volume was only 557,000 shares, so nothing big out there. But today, already 201,000 shares, so pretty decent move here in Jazz Pharmaceuticals. And I would have to say that, it's going to find resistance. It should find resistance. The key test inside that Jazz is going to be up at that February 26th, where you did see volume off of the high. So it's first real sign of institutional selling out there, and that's going to be the key, whether or not this thing can continue its move higher. And that's at a price point of about 169.80 out there. Let's go take a look at some of the other stocks here, moving and grooving. Let's take a look at, we could take a look at Netflix, I suppose. Let me go over, I think I might have Netflix over in the core area. Up 6% this morning, up $22. Let me see if, I've got Netflix out here. Let's go see what kind of volume is behind its move. So Netflix gapping up this morning. So far, volume behind the move, 1.9 million shares out there. It's going to deal with a little bit of a supply line, potential supply line out here on March 24th, down with 6 million shares. So, that area is a supply line, anywhere between 406 to 368 out there. But, pretty good volume. In only 14 minutes of trading, you've got 2 million shares. So 2 million shares going against 6. That's pretty powerful. That is pretty strong out there inside of Netflix. We'll see if it can hold its gains here. Let's take a look at some things moving to the downside here. Lead the charge to the downside. We got Metadata Solutions. Give me a second here. Just a system. I'm gonna, let's send my system here a little prayer. I don't know what it is that's bogging it down, but we'll have to close a few things down here. Just not going to do it at the moment. MDSO is the ticker symbol. It is trading out right now at 42.50, down with conviction behind this move. Let's go try to figure out where this is moving down into. And what we're going to first do, looks like a clean stock chart out here. Doesn't look like I have looked at this any time recently or at all potentially. Let's pull this back. What we're going to be looking for are some real spikes in volume to the downside out here. See where this might be traveling into. So it looks like it's pulling all the way back to its sign of strength back here from July 25th, 2013. Now, there were 2 million shares to the upside, but, folks, it's already done to today. Come on, baby. It's already done 1.3 million shares in 15 minutes of trading to the downside. So that's not a good scene out here. This says that Metadata Solutions could easily pull all the way back to its sign of strength from April in 2013. That's a lot longer way down. That area here is about $26.77 to $33.29, somewhere around there. So this is seeing some big institutional selling inside of this equity. Let me put this on a weekly chart out here. Let's see what shows up on the weekly basis for Metadata. Volume-wise, yeah, one would hope that the April 3rd area in 2013 would be the extent of its move, but if it just moves down into that range with volume, well, that's not the extent of the move out here. That has a high volume bar down around 850 or so. But take this one step at a time. May 3rd on the weekly chart, 2902, 3424, 4.5 million shares out there, and it sure does look like that is where this will eventually head to. Let's see, what else do we have moving here? Let's see, percentage-wise, Lexmark. Let's go take a look at Lexmark, the old IBM company, the printer company out there. LXK is the ticker symbol. It's trading off 9% this morning. We see they were out with earnings as well, $29 million versus $40 million from last year. Well, that's not a good scene for Lexmark. Revenue-wise, they did $800. They beat the top line. Man, got a lot of company in this case here, beating the top line and destroying the bottom line out there. $877 million. No, I'm sorry, they were off just a tad. My mistake. $877 in gross revenues versus $884. Nonetheless, this is down with volume here this morning. Trading out at 42.30. Let's pull back. Let's see where this is headed to. Let's just clean up this chart. So this had completed a 1-to-2, A to B equals C D. How about that? Off of the lows back in July 2012. That was your 8 point. Price, by the way, of that A point of the A to B equals CD. That was at 1610. Your B point was a retracement all the way up into about the January 28th, 2013 time frame. Gets up to 2892, then makes a retracement down to about the 2165 level on March the 1st, and then motors on, makes a 1 to 2 A to B equals CD to the upside. If you got the art of timing the trade, well, you know as I do, you do a 1 to 2, A to B equals CD, you're going to do something else. Sometimes it's just to move sideways. That's what it was doing here for about maybe about a week or so, and then looks like that move sideways is now turned into some institutional selling out here. Already 1.1 million shares to the downside. So what does that do? That takes you back all the way down into its sign of strength is the most likely outcome out here. In fact, you've got two levels of support, two signs of strength right around the 38-31 level. The first one, the most recent one, I should say, takes us back into the January 28 time frame. We had 4.3 million shares, that high, 38.31. Another sign of strength back here in July of 2013. That high is 38.74. So it looks like that, in essence, is the range of where Lexmark will pull back to. Currently trading at 42.31. Volume so far this morning, 1.2 million shares. Those signs of strength had 4 million and 5 million respectively. So this thing is falling from grace in a big hurry with some big volume behind those moves out here. I'd have to say it's more likely looking like this will move down to about the 35-ish range out there, and that is on Lexmark. Let's take a look at what else we got. Let's take a look at something. Let's go back and forth here. Let's look at, well, we can't. I'm out of time during this breakout here. So right now we got the Dow up 30, S&P up 2, Composite up 16. We get back from this break. Let's go check out a currency pair or two. We'll check out the VIX. We'll check out the New York Stock Exchange. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 44 points right now. S&P is up 5. Composite up 22 points, leading the charge on the way up. That is nice and bullish. NDX 100 up 5, up 0.5% as well, up 18 points. New York Stock Exchange, up about 27 points right now, just in line with the Dow and the S&P out here. Russell 2000, that's up 0.4%. It's up 5 points. So all of those pointing to nice moves here off of the bottom several days ago. Folks, if you haven't had a chance to check out Mastering Probability, please do so out there. You just go to the homepage of TFNN.com. You can test drive it for 30 days. It comes with an unconditional money-back guarantee. But the real thing, to put it in perspective, with our Tiger Dollar promotion that we have out there, the real cost of the newsletter is between $3, depending on what you want to do, between $3 and $5 a day out there. And just to give an idea, since August, the results as far as what they've been producing, about $90 a day in profit out there. Since December 18th, that's when I unveiled the Rhodes Momentum Indicator strategy. That's one of the things that we trade out there. That's really what we trade out there. That's been about $85 a day. So do yourself a favor. If you're getting those types of returns, then you don't need Mastering Probability. But if you're not, go to the homepage of TFNN.com. Take advantage of Tiger Dollars. Go sign up for Mastering Probability. Everything is so spelled out to you. I'm very meticulous as part of being a Virgo. And being a CPA is, to me, it's all a math exercise. It's all about the numbers out there. So I give a lot of analysis as to what the markets are doing and why. That typically gets out by about 7:30 in the morning, sometimes 8 o'clock in the morning. So a good hour and a half before the market actually opens, so that you can plan your day out there with regard to what's going on and all the trade details. I mean, it's very specific. Number of shares to buy, the whole kit and caboodle. In any event, speaking of kits and caboodle out here, I do have the Euro-US dollar currency pair. This is a pattern that we looked at back on in April 17th out here. This is the 30-minute chart. Shows that nice 0.618 Gartley sell pattern. There is a pattern that confirmed. We can see here that this thing looks like it's actually in the process here of maybe making an A to B equals CD to the downside, so it's moved lower. May, in fact, not be over. About 1.3773 looks like that could be the move to the downside inside of, well, actually, if we take a look at the actual ultimate outcome here of this pattern, the way that it would work here, that would actually give you a price projection of 1.3749 over the course of the long haul. Let's take a look check in on the VIX index here. Right now we got the VIX. It's trading down below its 50-day exponential moving average. Stevie likes to use this as a liquidity gauge because all of my testing here over the last many, many years shows that price is not as relevant as to where is the VIX trading with regard to its 50-day exponential moving average. As long as it trades below that level, it says you've got liquidity in the marketplace. That's what we're seeing being put to work here. Our second liquidity gauge, as you know, that's our Euro-Japanese yen currency pair. And as long as that is trading higher, that says there's plenty of carry trade liquidity in the market. That's what the current message is here. In the case of the Euro-Japanese yen, it was not able to bust out its lows. It tried, and it tried again. This last try again, that was back on April 15th. That's when our markets happened to put in a nice little bottom-ish out there. And what we are seeing here, although the moves higher have been just kind of slight, it's still moving higher. It does look like to me what this currency pair wants to do is try to bust out its highs. And folks, if it can do that, we're looking at a market that's going to trade higher. It is Terrific Tuesday. Thanks so much for joining us, folks. Have a great day. Look forward to seeing you tomorrow morning bright and early, or perhaps in about 8 minutes. Take care now.
Look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.